SPACs have been hailed as a way to democratize the stock market.
Buying in on the SPAC is not a terrible idea, and most of those folks have actually made a decent amount of money.
They've also been called scams and have attracted a lot of hype.
SPACs.
SPACs are big business, but they're also very, very ill understood. SPAC sponsors totally understand how SPACs work. The SEC totally understands how SPACs work. SPAC bankers understand how SPACs work. But what you find is that a huge proportion of the retail investors in SPACs don't really understand how they work at all and are just trying to buy low, sell high. The number of speculative sideshows in the markets is exploding right now.
He's talking about meme stocks, which are assets that usually gain popularity from retail traders and online culture. Think GameStop, Dogecoin, NFTs, and of course, SPACs.
A lot of celebrities, sports figures, politicians, and just investment celebrities come out, attach their name to a SPAC, and thereby attract a lot of money from small retail investors like you and me.
And that's risky because
You can buy rumors, you can just bid it up, it becomes a meme stock. And the minute that SPACs become meme stocks, the amount of risk involved just ratchets up enormously. And what used to be a relatively sober and obscure corner of the capital markets becomes a frenzy of speculation. Early on during the current SPAC boom, we had a couple of very high-profile SPACs like Nikola, the electric vehicle company, or Virgin Galactic, the space company, and they really did go to the moon. They went public and the stock price went straight up, and that made people think, wow, you can make a lot of money in SPACs.
And as people have been buying more of these SPAC stocks, we've seen more volatility in the market. Just look at what happened with Nikola, a zero-emission transportation company. The SPAC went public at $10 a share, and after it bought Nikola,
people started bidding it up. It went to $20, it went to $30, it went to $40. It went over $60 at one point. And then, like as things which go up tend to come down, it's crashed down below 20. And just to be clear, Nikola is trading entirely on future promises of future revenues. They have yet to make a single vehicle. The other big problem overhanging SPACs is that the Securities and Exchange Commission really doesn't love them. They used to be an obscure corner of the market. It's become multi-billion-dollar business with thousands of these things and a lot of small mom-and-pop investors getting involved. The SEC is beginning to worry.
That's because SPACs play by different rules. They're ways to put companies on the stock market without vetting their financials. And this increases the likelihood of market volatility, which isn't necessarily good for retail investors. So, the SEC is paying attention.
They're like, does it make sense that you have two different sets of rules for these vehicles? Does it make sense that a company can go public just based on hot air projections rather than on actual past financials? And so there's a lot of regulatory questions overhanging SPACs, and it stands to reason that at some point the SEC is going to try and normalize the rules governing SPACs.
Remember, SPACs have created a lot of hype this year from the media, celebrities, and influencers, but they can be highly speculative investments, and this is causing more market volatility. And this matters because
normal individual investors look at the market and they see something like this. What that does is it erodes faith in the market as a whole. And faith in the markets and faith in the market's abilities to properly price companies and to allocate capital is a core part of American capitalism.